Hey there, it's Phil Hall of Mortgage News Network here at the MBA annual convention. To my left is Rudy Zabran. And Rudy, some viewers out there may not be familiar with your company. You want to tell them a bit of what you're all about?
Sure. So Opus Capital Markets Consultants is a specialized risk management company. We really focus on helping lenders create kind of a perfect manufactured loan file. We offer QC services to originators. We help secondary market investors do perform due diligence on seasoned loan trades, as well as, we're active in the new RMBS space, working with jumbo conduits, guys that are aggregating product for securitization downstream.
The jumbo conduit is of interest to me. What is the jumbo market like today?
So we've seen a spike in Q4 in terms of the volume of what we'll call bulk transactions. The jumbo market today has been impacted by regulation, just like the originators have, and there's a lot of concern, obviously, regarding litigation kind of downstream. So today the emphasis really in the jumbo space is on, again, creating a perfectly manufactured loan file. And then that can stand up to the credit rating agencies and their requirements, that meets all the criterias of our investor clients, and that they can be securitized down the road. So in the due diligence space for a jumbo conduit, the process really involves ingesting a loan file, going through and doing a thorough credit re-underwriting review. There are components that for the valuation of the actual collateral, and a full regulatory compliance review to meet the requirements, again, of the national credit rating organizations.
Without giving away company trade secrets, how do you help companies to perfect their due diligence and their quality control? This has been something of a thorny issue for the industry for many years.
So I think, there's, in a lot of cases, it's not necessarily that we have bad loans that we're looking at. The most common thing that we see is actually kind of a poor manufacturing process, right? Loan file packages that haven't been put together completely, that are missing documents, maybe some data errors, information that's stuck in a loan origination system that hasn't made its way into a loan file that an investor would expect to see. So where we really help is we'll come in and we help them kind of understand that process. What does the investor need, and put the complete file together. So that I think that's the core component, is really making sure that the investor downstream has a complete file package, has accurate data, the loan was underwritten accordingly, and that the collateral value is supported. So we really help in assessing that. We can identify trends within a particular lender, maybe that's selling into a conduit, an individual correspondent, and then we help them through the process. A particular disclosure, for example, that may be embedded in a loan origination system doesn't always make it into a copy of the loan file, but it's an expectation of the secondary market that it be there. So we kind of help them work through the process of what are the requirements, and kind of take them through what they need to pull together in order to have a perfect loan file for an investor downstream.
Rudy, what is your view of the state of the housing industry, and where do you see it going in 2015?
So that's an interesting question. There's obviously a lot changing. I call this the era of regulation. There's a lot of regulation today that's impacting our clients and the entire market. We are seeing right now kind of a trend towards non-QM. I think it's a question of how big non-QM lending will actually be, but we're working with a number of guys that have kind of entered the space. Portfolio banks have been doing it for a while. It's a nice place to park cash today, and they're originating for the balance sheets, and we're seeing some of those loans trade out, some seasoned pools now. But I think what's interesting is we're seeing some new products. We're seeing guys that are going down the credit spectrum now, guys that are talking 500 FICO scores for originations, and minor credit blemishes, recent delinquency, but maybe a 1 times 30 of those types of things. And then obviously some product nuances. Bank statement loans have kind of re-entered the environment. As well as your typical interest-only products and those types of things. So I think it'll be interesting to look at the industry over 2015 and see what types of new products are we really seeing, particularly in the non-QM space, because it's a borrower base right now that's really not been tapped, and that new products are just extending to right now.
Rudy, thanks so much for being with us today.
Thank you, Phil.
This is Phil Hall from Mortgage News Network.
This is Mortgage News Network.